everybody. Back at it. Sauce Factory. Yeah. We had a lot of internet issues this week, so I couldn't drop the flows like I wanted to. But yeah. But I like to, start off with the mental fortitude and the cookie jar. Yeah. We had great offline speech. Should have recorded. Whatever. Uh, mental fortitude, diversity. No win situations force you to be great. No win situations force for you to bring out the best in you. It brings out the best in you because you have no choice but to win. Because you in this no win situation is no way out except going through. And those are situations I love being in because it brings out the best in me. Because in most cases, I'm lazy. I like a soft, lazy life. I'm admit that. I like the lazy soft life. But the reality of it is, ain't no such thing, right? You got to put yourself in difficult situations to bring out the best in you at the right time. Sometimes you don't even know you're gonna be in a difficult situation. You're gonna walk in there unexpectedly, and then next thing you know, all heck break loose. Throw the plan out the window, everything burning down, and you gotta see it through. And it's just like the market, right? We go on the market thinking it's gonna be all peaches and roses. One thing led to another. Newsman dropped. Somebody do this. Somebody do that. All hell break loose, and we out here tripping. No, don't know which way to go. But with a solid plan and strategy, you can trade your plan. Stay comfortable. So that brings me to crude oil, right? I'm gonna be biased today. This is my crude oil setup, and today it was a masterpiece of a trade today, right? It did exactly what I thought it was gonna do. Uh, it was a little wicky because of the consolidation breakout, but it was still overall a fantastic trade. And I'm gonna show you what I mean by these setups and how you can cherry pick these trades. I'm gonna go walk you through the weekly breakdown and then the hourly breakdown, and you can read the market by the hour. And I'm gonna show you what I do for my setups. Let's go to a weekly chart real quick. Plot these weekly levels, and then I'm gonna walk you through my mindset. So, boop, boop. So right now we're gonna act like, typically I do this on Sunday nights. I'm gonna mark these levels out real fast and I'm gonna show you I have it. It's our weekly high, low, right? I'm gonna mark those out. Reason being is we need to see what the range expansion is happening, right? If you look at it, previous two weeks ago was an inside week. Last week was a breakout week, right? Close, we took out this major level here. It was equal lows, took that out, right? They couldn't close and break out last time, but this time we did. Got a nice engulfing candle, closed and breakout. Okay, great. We also took out this level over here too as well. Closed and forced. So I'm marking these things out, right? Try to keep it level. Structure. I like seeing this force that let me know what time it really is. Like, if they really breaking down like this, you're gonna get some power out of this, right? But last time you seen it made an attempt, and then that was your pullback, right? That was the fake out because they took that liquidity here, and then they swept, came back up, rebalanced the price in that wick over there, tank. So that'll let you know something is up. The moment they couldn't close that, you can be in USO puts riding this down to the dirt, right? We still have agendas. So now I want to go down to the hourly chart and I'm gonna mark up the days. Boop, boop, boop. To make this fast, I'm gonna go ahead and put these session breaks on real quick. That'll be the white vertical lines there so you can tell difference, right? We want Friday. Reason why we want Friday close because that's where the new auction gonna start at, right? So I'm gonna go to Friday close in price. It closed as a red candle. Mark that up. Typically, I draw like a simple line across, but for the Friday close, I like to have his own special ray line template because I want to see where price is really, trading at, right? So Friday close, as you see, market open up on Sunday. Technically, this is a Monday. This is the Asian market. This is a Monday, right? So as it's doing all the consolidation, bouncing around, that's a low for the last week, right? But you really look at it, this Friday high, we never took Friday high, so they're letting you know we are definitely shifting down. So Friday high is there on the table. So as Monday roll around, we watching. Boom. Mark out your Monday high. Great. Now on Mondays, just tracking price. I'm not looking for a move unless it already set up last week. But I'm not looking for no moves on Mondays. Right? I'm just letting it set up. Then want to go for Monday low. It's here. Tuesday, because Monday is just nothing but a range. It's just establishing a range. Just building a range. Tuesday, we're looking for that range expansion. Wednesday, I'm looking for my setup. Dash trade setup. So got my Monday low, Tuesday, Monday high. Boom. I was getting to this Tuesday. So this is the Asian market. Market is open back up in the Asian. We got a high for Monday night. Boom, boom. Price follow. Now coming into Tuesday, it's 5 a.m. Asian. It's the London coming into the New York hour, right? As you see, price is rising. Now, price made a retracement back into this range, here to here. So typically what I like to do, I want to mark this out. So you definitely want to get your overnight level low. So that is a London low. You're just marking it out, right? We already know we didn't get none of these levels. So technically, this is our London high right here because that's the midnight candle. So pretty that's going into your London market starting a new day. Oh, you can mark these out if you want, but what really matters is the low. Because I'm already know we're in a bearish setup, right? I can use my 34 on a higher time frame. That's the model simple moving average I like to use, or I can go into my MACD RSI because I'm looking at it. We already came from bearish territory. We really didn't cross the zero level, so we already looking to curl over. We back down below the zero level on the MACD and the RSI in bearish territory because that is below 50. That's the neutral zone. Once below this yellow line, which is the neutral line, then we know we bearish, right? You could have took this trade setup, but once again, I prefer to wait to see the range expansion and see them expand the range. Okay. So when they doing this pullback, all I do is I run a fib from the high to the low. Okay. But yeah, so from there you'll let price do what they're gonna do. Right, boom, 8 o'clock hour, price building. This is your 9 o'clock hour in the market. From there, price take out the London high. Right, hash that out. Take out the London high, make a 78% retracement back into last night range, which was also a volume imbalance right here. Right, you got a nice little volume imbalance right there. They wicked into that block, and then once you start seeing them reject, you could have took this down the moment it opened up here, or you could have took any of these reversals. So me personally, I like to take trades at the 618. Reason being, your stop loss either is at the high, right? 60 something ticks, you'll figure out your own risk management, or you can wait until you get a rejection. Let's go down to a 12-minute chart real quick. You can use 15 if you like, but I'll use 12. Should be the same type of results. Okay. So once you start seeing the candle reverse, now that's your new high, right? That's your high. You can target the low of London because once they make that little dump and you see they did not look back whatsoever, there's a no look back trade, no look back. But you know what's going to happen. Tuesday is the range expansion. So what did they really do, right? What did they go for? They went from Monday low to the weekly low, and they kept on going, right? They kept on going until they hit this level and pivoted. So now I got an established Tuesday low, right? I have my Tuesday high, my Tuesday low. Boom. I'm just tracking. This is how I'm tracking. I'm doing nothing special. I'm just tracking price, right? But if you wanted to take that trade, you look for your reversal at the key levels. At the 61%, start waiting for your rejections. You wait for the rejections at the 61%. That's how you know it was a great pullback. Price rebalanced and did everything you need to do. That's a great discount. Once it start rejecting from that area, you can easily play it safe and say, hey, I'm just going to go short here. I'm gonna go short at the high. Stop loss is right here at this pivot. If they take it, oh well, can I live with that risk? Whatever may be the case. If not, you can say, well, I'm gonna wait for a more definite candle, right? I'm gonna play this breakout here, but that's gonna cost you more money. You're gonna have to go on the lower time frame, find whatever you need, or say, well, they take this low, I'm gonna enter the trade, whatever safety you want to put in place, right? But figure out your risk management and you wait for setups like that. Get rejected out of volume imbalance off the 1 hour chart. I already made over 78% retracement, almost 88% retracement. That is a great discount. Why not shoot your shot, right? But it's not my trading day, it's my observation day. I don't like to trade on certain days out the week. So definitely got down there, did what it needed to do, put in our low, right? Later on, we will look back and go over, say, like, hey, what's to the left? But that's not the game here. It's showing you what the price did. So this is our high. Take this here. I'm going to recycle this. I'm going to waste things around here. Okay, think. Tuesday high. Now that also that Tuesday high is a place of liquidity because they took the high from midnight, the midnight high, to get liquidity trap buyers in there because people went short. It's like I'll go short here and leave the stop loss right there. Other people will go short there and leave the stop loss. They like, yo, trade up. But they did not pay attention to the shift in market structure took place. Yep. They did a market structure shift here, right? And then it started calling up, right? It started going straight up. Boom. That's what price start doing. I love to see this, especially overnight when I'm coming to the market in the morning. When price start doing this, like boop, 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 boop. This is not natural. It's not healthy. It's insanity, right? You shouldn't be doing this. And you got highs. Come on now. It's be nice. Of course they're gonna sweep. Of course they're gonna take it. It's liquidity there. It's money in the bank. Of course they want it. See, Judas swing, price break up, did not close and breakout because it's say high now, right? So price did not close in the breakout. It's a rejection. You can legit wait for this candle to close. Look what this candle gonna do. If it take the low, come on now. In a rise like this, they should never took that low because look at I want y'all to pay attention to these candles real quick. Let you know something. How they stack up, right? This is how you want to know something is off. This is your low. Low. This candle did not take out this candle. This candle did not take out this candle. This candle came equally close, but it did not take out the wick of this candle, right? Safe. Now, for demonstration purposes, I will put a line here so y'all can see. See that? So low didn't get taken. Low did not get taken. Yeah, low did not get taken. Right? Boom, nowhere close to the low. Boom, nowhere close to the low, right? Nobody touched that low, right? Same thing here. Now, all of a sudden, this low get violated. And you got a pin bar. Read your candlesticks, right? It's one of Rod's favorite candles. Boom. Pin bar closed on a intraday time frame. On a 12, 15-minute chart, a pin bar is appearing on that. It will let you know what time it is. It will definitely put a rain on your parade, right? To let you know what time it is. Yes, with the even star pattern, because you had the bullish candle, followed by indecisive candle, followed by bearish engulfing. Set it off, don't sit it, right? So you could have took advantage of that and took it all down. Bar, you just waiting for the range to establish itself and expand out and let you know what time it is. You can also do that as well. You don't have to participate in every single trade. But you was there, you seen it, you say, hey, this is a 10x trade. I want to take this because I would have been looking like, all right, cool. What's my profit here, right? So instantly, I'm gonna look at the low of this candle. I'm gonna say, all right, there's 88 ticks there. Well, maybe they're gonna look for the Monday low. That's 113, and what's the weekly low? Okay, that's 128. Those are guaranteed targets. You got a range so you can set your targets. Don't be greedy. We ain't looking for all of this. I want to know what's guaranteed. What's guaranteed is a previous level. They can guarantee take out a previous level. I don't care about the mystery levels. I want a guaranteed victory. The Monday low, the weekly low is a guaranteed target. If they're going to go get it, there's low hanging fruit. I can easily take that trade, which is a great trade. 128 ticks on CL at $10 a tick. Come on now, you do the math. You know, bring your calculators out. 128 times 10. Do the math. You know what you come up with. But these are your targets, right? So stay smooth on it. Boom. So then that brings me into Wednesday. After I seen a dump like this and we closed in breakout, we broke out of the Monday low, broke out of the weekly low. So now we in breakout territory. We closed in breakout. Price did not come back. Great. So now I wanted to see this consolidation here. Right? Boom. This is our consolidation. Price respecting it. Boom, boom, boom. So now with this level of consolidation, you already know what time it is. It's a block now, right? I wanted to see them. You got to mark out the closing price level. So this is our Tuesday close. You got to mark that out. Mark out Tuesday close. Kind of overextended it because technically market closed here on Wednesday. Here. But you want to pay attention to the close of the previous day. They're going to let you know what time it is. It's going to help you with your direction. Closing price. It's the New York closing price, right? So that's why I like to keep track of the New York closing price. I do it for Monday too, but you already know. Monday close up there. This Monday close, as you see, that's how we know we're going to go short. Price never closed above the Monday closing price. When it came back, it swept there too as well. You see where it retested at and then it dumped. So let's get back down here, right? From here, I'm seeing price consolidating. I want to see the consolidation. I want to see that consolidation. And once again, like I told you about this crazy trend, right? Well, let's get back up to the 1 hour chart because this is where all my business take place in 1 hour. When I wake up in the morning, like today I woke up because this is my trading day. So I come in with a fresh set of eyes. The first thing I see, okay, great. This is where we at, right? So when I come to the market and I say, we've been here 2 hours in this range. This the high, this low. Okay, we already took the London low. That was yesterday. Get rid of that. Oh, that crap out the way. Right? We in this hour fair value gap here. Great, fantastic. And we are consolidating. We had a nice, wrong one. We had a nice vertical move up. Boom. To this level, consolidation. All right, now what? Now I want to run my field from yesterday high to last night low, right? So that's the lowest point. I like to go from highest point to lowest point. Look where we stopped at, the 61, right? 618 retracement. Great. So that's my criteria to take a trade. Now, where I'm going to be looking to take profit at, right? Boom. From there, I'm going to say, well, where's my liquidity points at? Well, here's one. Great. That's a little dip. A dip down, it was consolidation, but this is the lowest point of this consolidation, right? So it's definitely a liquidity point there. Somebody said, hey, we want this. So that's my sell side liquidity. Okay, great. Yes, they can get down here, but you don't know where they're going to turn it, especially at a block. So I definitely like to target liquidity levels for my take profits, right? Then I said, well, what if it's going to be a continuation of the downside run? Are they going to continue on this Wednesday in a span of Tuesday range? Maybe yes, maybe no. So I'm going to calculate that too. Yes, this is an order block consolidation. Consolidation, breakout, retest. So you get sideways price action, price breakout, oh, back over, won't retest, won't react, won't leave out. Order block. Price came back in, price test, I out again. This right here, this candle here confirmed the block, right? See the little have done morning star, right? This confirmed the order block because this was the retest of the block. If it wasn't going to be a block, they should have took it out. But the fact that they held, I mean, that's a confirmation. Another retest here, very shallow retest. And then they went on about their business. Now, when it came back down here with force on the lower time frames, I'm sure it's candlesticks that they was looking for. But I like to look at what's easy, what's low hanging fruit, what's possible, and I play it to that because remember, I always say pigs get fat, hogs get slaughtered. So it's okay to be a pig, you don't want to be a hog. So I'm gonna do my risk to reward, right? So I'm saying, well, they break out here, what's my stop loss, right? I say, well, this is the high. Oh, all right, cool. What's the low here? Is it 100 ticks on this? Okay, that's 110. If they take out the Tuesday low, that's 175. But I'm like, okay, great. But I'm looking up where can I get in? Like, where can I get in? Where can I fit in? So when I came to the chart, I'm like, okay, we already here. What's a good point? Actually, I have to show Rod this trade. My entry was 67.25. I ain't this. I'm gonna tell you exactly. I'm gonna show you the count. 67.25. So I seen this candle here, right? It was one of these. I was looking at it. I said, okay, cool. They take that wick out because this should have been a 3 candlestick order block continuation, right? They take that wick out. I want in on it, right? So let's go down to like a 6 minute chart. Fast. I seen this level and I'm like, all right, cool. Let's see all this little market structure. I'm looking for them to take that out. They take it out. I'll be great, fantastic, whatever, right? I'm just watching. So I'm looking for them to take something out, give me a market structure shift. On way over here, they already came back, retest, start drawing on down. Now my stop loss at the high, that's why I'm like I had to get in up here. Anything less, then you're not gonna be in a prime location for the trade to play out. Just not gonna happen. But you get in any lower than that, now your risk management got to be crazy high, right? So what if you would have got just jumped in way down here, or you would have took that breakout? Now you got to have 50 tick stop loss, or you could have put your stop loss there, which is still 40 ticks. Like where are you going to get in on this breakout, right? Without putting yourself in danger. Could you make that cheaper? Yes, no, maybe so. But seeing they put a gap there, you got another rejection here. All you need to do is get locked into the trade. You don't have to risk that much. 30 sun ticks at the level I was looking at. 67.5. I remember that screenshot. So around this ballpark, this is not a bad stop loss. 34 tick stop loss is not bad, knowing that you're at the top. Being at the top, a price at the 618, this is an hour level. Why not take the risk, right? When potentially look to the risk to reward, right? It's 200 ticks on the board now. Or you can say, well, I'm not going to be that greedy. 138, I'm not going to be that greedy. I want to go here. 98, even 1 point move, 10 ticks, do the math. You already know what 1 point on CL will do for you, right? So you don't have to be crazy greedy. Just be intentional about where you're going to trade at. And you just simply get your trade, sit back and relax, kick your feet up. And it did exactly what it's supposed to do. Jacked it from the 618, broke out of consolidation, and went to liquidity. Swept it, and then it went on by its business. This is why you don't fall asleep at the wheel. Put some risk management in place. If it didn't get to your target, let's say you was being greedy, you was trying to be that hog, trying to get down here that Tuesday low, well, guess what? They stopped at liquidity, swept it, then ran up, took the highs. What happened at this high here? Stop losses. Stop losses was here, and hit stop losses were here. So let's go ahead and mark that up, right? Handy dandy. Oh, okay. And flip you. Oh, stop loss there. And then another one. Boom. Stop losses are here. So why not? Let's get this off the table now. Why are we not going to run this, right? We already came here before. Most people fell asleep at the wheel. They said, hey, price ain't coming back up here. I'm going to leave my trade alone and I'm going about my business. I'm holding to the moon. Diamond hands, right? But they're going to come get you because you're looking for a Tuesday low and this is all they really wanted. They went to 65, boom, 65, 63, then reverse. Boom, boom, boom. Come on now. And where did that land you? Let's go back up to the 1 hour chart and talk about it. Okay. Back in that consolidation zone. Boom. That's another block. Remember I told y'all about this consolidation. They're playing this range, right? And they're just gonna do a range expansion. Let's get rid of this field. So as you see, all they did, span the range, came back, we tested this, we test again. Now what are they doing? It's looking like a shift back down. Unless they're gonna find support and go up from here. 9-10, they're gonna come back down. She wrote. So there you go. So that's how I read CL. That's how I like to play CL. That's what I like to do. I'm gonna spin a block on Friday because I want to see what they do Thursday. I want to see if they consolidate, put in reversal, or give me a low hanging fruit trade. Not sure. I'm just gonna take advantage of what's presented. Any questions? Questions, comment, concerns? Hi. What?
I love how you broke it down.
I know.
So,
Proud.
Neil,
Yes, sir.
uh, so you have your alert set as prices entering or getting close to your point 61?
Yes. Typically, what I do, if let's say if it haven't made it there yet, because remember, you gotta act. This is the time I'm waking up, right? I'm waking up in the morning, so this hour already closed. This is 6 a.m. for me. This New York time, right? So my chart set to New York. You already know what time schedule I'm on. So this is 6 a.m. I'm rolling into the chart around this time. So if I see this, I'm just gonna run my technicals, see what the market at. Now, if it's still down here or down here, right? So let's say price is still in this part of the trend, still trying to run up to this point. I will set an alert that let me know to get here when it get there to look. But if it's there already when I come to the chart, I'm just gonna be looking for an entry. I want to see more consolidation, and then I want to see a breakdown, consolidation breakdown. That give me
Okay.
comfort and let me know that the trade is going to dump because of the simple fact that it's stuck at a 61% retracement. makes sense.
Gotcha. Okay.